Hey photographer, welcome to the Financially Focused Photographer. I'm your host, Tiffany Bastian, accountant and tax pro for photographers who's obsessed with helping you keep more of what you make. Let's be real, you didn't become a photographer to spend hours deciphering tax code or tracking expenses, but here's the truth. Mastering your money is what turns your passion into profit. Each week, we'll skip the Google rabbit hole and get right to the answers you actually need. We'll also explore your relationship with money and how it might be holding your business back. From solopreneurs just booking their first clients to established studios hitting major revenue milestones, my mission is simple: to help you understand the numbers game so you can build real wealth doing what you love. So hit subscribe, tune in each week, and let's get financially focused. Hey there, and welcome back to the Financially Focused Photographer. In our first episode, we tackled money mindset and how your beliefs about money can either fuel or sabotage your success. In our second episode, we talked about strategic business investments that can actually increase your revenue over time. Today, we're getting into something that I think is going to be a little eye-opening for a lot of you: the difference between what your business brings in and what you actually take home. We've all seen it scrolling through Instagram or Facebook, photographers proudly announcing their six-figure or even seven-figure businesses. And don't get me wrong, those achievements are absolutely worth celebrating. But there's a conversation that's not happening enough, and that's what photographers are actually paying themselves after all the expenses, taxes, and reinvestments. Because here's the truth: a six-figure business doesn't equal a six-figure salary. Not even close in most cases. And understanding this reality isn't about minimizing anyone's success. It's about giving you the clarity so you can build a business that truly supports the life you want. Let's start by breaking down what we mean by take-home pay. This is the money that actually makes it from your business account into your personal account, the money you can use to pay your mortgage, save for retirement, or take your family on vacation. I remember working with a wedding photographer who was absolutely crushing it on paper. Her business was bringing in $150,000 a year, and she was posting about her success all over social. But when we sat down to look at her numbers, she realized she was only paying herself about $35,000 a year. The rest was going to her studio space, high-end equipment, and second shooters, advertising, taxes, and dozens of other expenses. Was she successful? Absolutely. But was her business effectively supporting her personal finance goals? Not quite. This isn't uncommon. Now you might be wondering, why does this matter as long as I'm booking clients and my business account looks healthy? Here's why. Your business exists to serve your life, not the other way around. If you're working 60-hour weeks, missing family time, and feeling perpetually stressed, but your personal financial situation isn't improving, something is misaligned. I've seen too many photographers burn out because they're chasing revenue numbers without connecting those numbers to what they actually need to live the life they want. They end up trapped in a cycle of always needing to book more clients, taking on more work, and hustling harder just to maintain their lifestyle. But it doesn't have to be this way. So let's talk about finding your personal take-home sweet spot, that balance point where your business is generating enough for you to pay yourself, an amount that supports your desired lifestyle without burning you out. This starts with getting crystal clear on your personal financial needs. Grab a piece of paper or open a spreadsheet and let's do a quick exercise together, okay? Write this down: your essential monthly personal expenses like housing, food, utilities, insurance, things you have to pay. Your desired lifestyle expenses: travel, dining out, hobbies. And then your long-term financial goals: retirement savings, college funds, home purchases. Add these up and you'll get a clear picture of what you actually need to pay yourself from your business each month. For some of you, this number might be $3,000 a month. For others, it might be $10,000 or more. There's no right answer here. What matters is that the number is honest and aligned with your actual life goals. Once you know what you need to take home, we need a system to ensure your business actually delivers that to you. This is where I love adapting the Profit First approach. This is based on a book called Profit First. If you haven't read it, I'll put a link in the show notes. I highly recommend it. It's a great read to help you start building your financial foundations. The traditional approach to business finances looks like this: revenue minus expenses equals profit. But with Profit First, it flips it. We say revenue minus profit equals expenses. So what does this mean? It means you pay yourself first, then figure out how to run your business on what's left. Here's how you can implement this as a photographer. Set up multiple bank accounts for your business: an income account, a profit account, an owner's pay account, a tax account, and an operating expense account. When client payments come into your income account, immediately distribute that money based on predetermined percentages. For example, like owner's pay could be 30 to 50%. This is your take-home pay. Taxes, 15 to 20%. Profit 5 to 10%. This stays in your business to reinvest back into the business. And your operating expenses, those are the remainder. These percentages will vary based on your business model and stage of growth, but the principle remains the same. You're prioritizing your take-home pay rather than just hoping there's something left for you after all the expenses. The power of this approach is that it forces you to run your business on a what's left after you've paid yourself rather than paying yourself with what's left after you run your business. This is exactly why understanding what you want to take home first and then determining your operating expenses helps you reverse engineer your pricing. When you know what you need to pay yourself and what your business costs to run, you can work backwards to set prices that actually support your financial goals. We'll dive much deeper into all of the pricing strategies in a future episode. But this foundation is critical. I actually use this approach in my own business with Relay Financial, which allows you to have up to 20 accounts for free. I've set each account to automatically transfer certain percentages that I've carefully calculated. Every month, when money comes into the income account, it gets distributed to my owner pay account, then to my payroll account for my team, to my operating expense account, and then to savings. And for that, I use the savings for future investments in the business and our annual team retreat. Relay does this all automatically once I set everything up. I absolutely love and recommend Relay Financial to all of my clients. It's a free business banking platform. If you're interested in learning more, I have written a detailed blog post about all the benefits, and you can use our affiliate link to set up an account. And I'll put that link in the show notes for you. Now let's look at how different photography business models affect your take-home pay, because this is where things get really interesting. Let's say you're a portrait photographer charging $300 a session and you're booking 200 sessions a year. That's $60,000 in revenue, which sounds pretty good. But let's break down the expenses. You have studio rent of $1,500 a month, so that's $18,000 a year. Then you have equipment and software to keep up with. That's $5,000 a year. Marketing and advertising, $6,000 a year. Client print and album costs, $10,000 a year. Education and miscellaneous, $3,000 a year. That leaves $18,000 before taxes, which means your actual take-home might be closer to $15,000 for 200 sessions. That takes significant time to shoot, edit, and deliver. Now let's look at a photographer charging $1,200 per session and booking 50 sessions a year, also making $60,000, but with similar fixed expenses but reduced variable costs due to fewer sessions. So studio rent is still $18,000 a year. Equipment is $5,000 a year. Marketing and advertising is a little lower, $4,000 a year, because they need less clients. Client print and album costs are also lower because they're serving less clients. That's $5,000 a year, and education and miscellaneous is $3,000 a year. That leaves $25,000 before taxes with potential take-home of around $20,000 for 1/4 of the number of sessions. This is just a simplified example, but it illustrates why revenue alone doesn't tell the full story. The photographer with fewer clients is likely spending less time shooting, editing, and communicating while taking home more money. Speaking of time, let's talk about something that photographers rarely calculate: their real hourly rate. Take your annual take-home pay and divide it by the number of hours you actually worked in your business. For many photographers, this number is shockingly low, sometimes below minimum wage. I worked with a family photographer who was taking home about $30,000 a year. Sounds decent until we calculated that she was working 60 hours a week, 50 weeks a year. That's 3,000 hours. She was literally making $10 an hour. When she realized this, she restructured her entire business to focus on higher paying clients and more efficient workflows. Within a year, she was working 25 hours a week and taking home $45,000 a year, nearly tripling her effective hourly rate. Your time has value beyond money. Of course, time with family, time for self-care, time for creative personal projects, these things matter tremendously. So when we talk about take-home pay, we need to consider the time investment required as well. There's often pressure in the photographer space to constantly grow, scale, and expand. But I want to give you permission to build what I call a lifestyle business that truly aligns with your goals. A lifestyle business is one that intentionally designed to support your desired lifestyle rather than to maximize growth. It might mean capping your client load at a certain number, choosing a business model that gives you more time freedom, or saying no to opportunities that would increase revenue but decrease your quality of life. On the other hand, if you dream of building a photography empire with multiple photographers, a large studio, or diverse revenue streams, that's fantastic too. Just be clear about what that means to you and your take-home pay, especially in the growth phases, where you'll likely need to reinvest heavily back into the business. There is no right or wrong choice here. What matters is that your business structure and financial decision align with your personal definition of success. Now let's get practical. How can you actually increase what you're taking home without necessarily increasing your workload? Well, you could raise prices strategically, not just across the board, but particularly for services that demand more of your time or resources. Price based on the value you provide and the time investment required, not just what the market seems to bear. You could streamline your offerings, analyze which of your services or products are most profitable, and focus your energy there. Sometimes doing fewer things more profitably is better than offering everything to everyone. Then outsource any task that you can pay someone else to do for less than that rate. This might include editing, administrative work, or even certain types of shooting. Reduce unnecessary business expenses. Review your subscription, software, and regular expenses. Are they all directly contributing to your ability to serve clients and generate revenue? Be ruthless about cutting what doesn't serve your bottom line. Develop passive or semi-passive income streams. Consider adding print sales, presets, photography education, or stock photography to your business model. These can generate income without requiring an hour-for-hour exchange of your time. Implement the profit first system. As we discussed earlier, paying yourself first fundamentally changes how you approach business finances and ensures you're not left with the crumbs after expenses. Ensure you're taking tax advantage of all available deductions and structuring your business in the most tax-efficient way possible. This is exactly what we help our clients with at Bastion Accounting. We do quarterly tax planning, and then we also make sure that they are structured properly. If S corporation or a different business entity setup will help them save money on taxes at a certain revenue point, this is what we're guiding them with. This is really important to consider when trying to save money on taxes. Let's talk real numbers, because I think this transparency helps everyone. Based on my experience working with hundreds of photographers as their accountant, here's what I typically see. Solo photographers with revenues of $100,000 to $150,000 typically take home between $50,000 to $60,000 a year, and in a lot of cases more, but that's a good average. Photographers with revenues of $50,000 to $75,000 a year can often take home $25,000 to $35,000 a year. Photography businesses grossing $250,000 or more with team members typically result in owner take-home pay of roughly $90,000 to $120,000. Though this varies widely based on business structure and growth stage, these are just ranges based on my experience, and your situation may differ, but I share them to help you calibrate expectations and to highlight that there is always a direct correlation between revenue and take-home pay. What matters most is not what others are taking home, but whether what you're taking home supports the life you want to live. As always, I've pulled a question from our Financially Focused Photographer Facebook community, and if you haven't joined us there, please look us up. Today's question is, I've been in business for 3 years, just realized I've been paying myself less than my second shooter. I feel embarrassed and don't know where to start fixing this. Help. First of all, thank you for your honesty. This situation is so much more common than you might think, and you have nothing to be embarrassed about. The fact that you're paying your second shooter well speaks to your integrity as a business owner. Now it's time to extend that same care to yourself. The first thing you should do is review your personal finances to find out what you actually need. I always look at this like a good, better, best situation. So good would be, what do you need to keep the lights on and simply survive? Better is, what do you need to not just survive, but also thrive? And best is, what do you need to live your ideal life? Once you have these three numbers, we can start with your business to level you up through these personal financial goals. This clarity gives you tangible targets to work toward rather than just a vague sense that you should be paying yourself more. Start by implementing the Profit First system we discussed today. Set a specific percentage of every client payment that goes directly to your owner's pay account and make this a non-negotiable. Next, look at your pricing. If you're able to pay your second shooter but not yourself, it's a clear sign that your services are underpriced for the value that you're providing. Consider a 15 to 25% increase for all new bookings going forward. Finally, review your current bookings and see if there's opportunity to add value and increase revenue with your existing clients. This might be through album upgrades or additional print sales. The most important thing is that you've recognized the issue and you're taking steps to address it. That puts you ahead of so many business owners who never confront this reality. As we wrap up today's episode, I want to leave you with this thought. The true measure of your business success isn't the revenue you generate, but the life that revenue allows you to create. Getting clear on what you need to take home from your business isn't selfish. It's essential. It ensures that your photography business remains sustainable, not just financially, but emotionally and creatively as well. Whether you're aiming to support a modest lifestyle with plenty of free time or building substantial wealth through your photography, what matters is that your business decisions align with your personal definition of success. In the next episode, we'll be talking about setting up simple but effective bookkeeping systems that give you clarity without overwhelming you. So if numbers aren't your thing, you definitely won't want to miss this conversation. If you found value in today's episode, please subscribe, leave a review, and share with a photographer friend who might need to hear this message. Until next time, I'm Tiffany Bastian. Thank you for tuning in to the Financially Focused Photographer. Don't forget to check out that Relay Financial blog post in the show notes if you're interested in setting up a similar system for your photography business.